Good morning, it's Wednesday. Thanks for joining me. I've got to start with gold, haven't I? If you were trading gold yesterday or even just watching gold, we had a really dramatic collapse and then very strong bounce back. I don't know what the reason was. Let's go to the 4-hour chart. This section goes back to the 18th of September, so it's about 2 weeks of price action. But it's the latest move up in gold, so it's relevant. Now, there was no indication that there was going to be a significant collapse, not that I saw anyway. We actually broke the first fib level and continued down. We didn't get to the next fib level. I don't really know why we bounced from here. There's no technical reason. I guess I could point to this previous contract high at 37.91. Our low was 37.93. That's the only reason that I can find that we would have bounced from there, found buyers. It's kind of strange because we had this huge bearish engulfing candle on the 4-hour chart. It took out 3 bars of price action, closed near the low of the candle, bang on the support level, and then we continued lower. So you would have thought we'd have had at least one more red candle here. But the buyers came in, and they came in aggressively above the 38.2% fib, as I've said. So then we got the low test candle, the long lower wick, small body, and bang. Then we just took off on the 4-hour chart. So what's next? I'm a trend follower, and we're in a bull trend for gold. So I should be feeling bullish. And there are no particular negative candles on the 4-hour chart. And even on the daily chart, there is no particular negative candle. Yesterday's candle looks fine. A low test, decent green body, and we are pushing higher today. I've just got some doubts in my mind, which I wanted to get across to you. The 1-hour chart. The bounce has tried a break above the previous all-time high of 38.71. We got to 38.75, but we've pulled back. I just don't trust it. My main concern is that we get a double top pattern. Now, the double top is not confirmed until we break the low of yesterday's low at 37.93. I just don't like the price action here. Now, if we start sailing through 38.76, 38.77, we'd need to get through there and really be pushing. Then I would suggest that the bulls actually do have control of this market. But maybe the bulls are shell-shocked after yesterday's move. Maybe bulls are now thinking I could get out at yesterday's highs and sit back and wait and see what happens. Selling into a bull trend is not a very clever idea, although it would have worked beautifully yesterday. It may work today. Maybe this is a double top. That's all I need to bring your attention to. If you're a gold bull, if you've got long positions, you may need to be careful. This may be a double top. But as I say, double top would be a up move, a down move, an up move, and then a down move, breaking the neckline to the double top at 37.94. So we've got a long way down again before we get confirmation of the double top pattern forming. If we start rejecting this area, it's going to give an increased chance of that happening. Silver was a lot easier. Silver came down to our support level here on the fib level, 45.80. The low was 45.78. So yeah, we just kissed the support level and bounced off. So that's all good, as it should be. This looks a bit more positive. We did break above the previous high. We've retraced a bit. We are back below that previous high around 47.18, but that doesn't concern me so much. I think we are still in the bull trend and silver will continue to push up. And as I've said earlier in previous messages, it seems like silver is accelerating to the upside. Silver spent a long time trading sideways while gold was pushing higher, and I've just got this feeling that that spread between silver and gold is going to close up. Silver will continue to push up and gold maybe will lag behind a little bit or even turn lower, as I've explained. I did show you a lot of bull trends yesterday, particularly in the euro against other currencies. The euro against the dollar is more of a sideways or even a negative, but the euro is doing well against lots of other currencies. Now, the euro yen, which I think I did touch on yesterday, has pulled back quite significantly. We came back below what should have been good support around the 23.6% fib at 173.85, especially when you compare it to when you couple that with this significant peak up here at 173.88 and this swing high here. So the previous price action supported the fib level being a good support level. And here we go. Let me show you the hourly chart. We've actually broken below the moving averages on the 1-hour chart. So I could say that this is quite negative on the 1-hour chart. If you were trading short term, the moving average crossovers, once we broke the trend line, did indicate that the market would continue to fall. So on the 1-hour chart, this actually looks quite negative as far as the moving averages are concerned. We've got some moving average crossovers, and the 100-hour might be about to cross below the 200-hour, which we haven't had for quite a long period of time. Okay, well, 12th of September. But then again, those crosses failed. We did turn around and go up. And I've got a feeling that's what's going to happen in this case too. But I just wanted to check the 1 hour chart to see if there was a moving average support, but we're trading below them. So for me, the really good support level now, and I hope we get there, we probably could, there's a good chance that we will get down as low as 173.07 would be the support. But on the 4 hour chart, we've got a trend line going back to the 6th of August. We have got a 200 period moving average on the 4 hour chart. We've got the 38.2% fib at 173.07. Price action wise, we don't have the greatest price action supporting that level, but we do have a previous peak here at 173.00. So that to me looks like a good support level. And with the downside momentum that we do have on the hourly chart with the moving average crossovers, I think there's a good chance that we can drop down there. We're only looking for another 35, 40 pips to the downside for that to happen. I think there is a good chance that that will be a low for the steep correction and the buyers will come back in, push us back up to at least 173.80. We could have a 70 odd pip potential profit on that trade. Where would I put a stop loss? Probably my crosshairs would be useful for that. If we got 172.90, I'm going to say 172.85 just to give it a bit of breathing space. That would be enough. A break below 172.85, I think we'd have to consider that the support level had failed. So you're looking at maybe 30 pip stop, 25 pip stop to make a potential 70 pips. So it's a 2-to-1 risk reward. There is a chance we could push back up through there if it's a really strong rebound and get even further. So you might not even want to set a target at 173.80. You might want to have a trailing stop and be in a position where you could really take advantage of a strong bounce. We've had them before. When we pulled back here, we had a very strong bounce and made a new high. That's entirely up to you how you play it, but I think that is probably a decent opportunity today if we see further weakness in the euro versus the yen. I still have it in my mind that the dollar's going to push higher against some currencies, especially the Aussie. You might remember me calling a high in the Aussie dollar, and it worked perfectly. We reversed bang on the trend lines, the fibs, everything else, as you can see down here. We are seeing a bit of a recovery. I'll show you that on the weekly chart. Yeah, that was where we reversed on the weekly chart. We got the high test, red body candle, moved lower. But as I say, we're recovering this week. Now, what do I want to look at? Probably the 4 hour. There we go. I should probably put some fib lines on here too. There we go. Take that peak. So we've got close to a test of the 61.8% fib, which should be a decent resistance level. If I am right, if the trend has changed and if the dollar is now going to be the stronger currency against the Aussie, the euro and the pound. We did reverse yesterday, at least, just below the 61.8. So the sellers came in a little bit early. 66.27, about 5 pips below there and matching this peak, 66.27, this previous peak. Maybe I'm right. Maybe the Aussie has reversed and will continue to go lower. Maybe that's the first lower high of this move, in which case I would then draw a trend line to give me guidance if we bounce back again. Today, the trend line comes in around 66.20. So 66.20, 66.30 would be the resistance level. We get up through 66.40, then I'd have to consider that that resistance hasn't held. Anyway, the reason I'm talking about this is because longer term, it looks like the dollar has bottomed out, can push higher. And when you consider that there is a labour market issue, that we might even have a government shutdown, there are a lot of negatives for the dollar, and yet it's not going down. That's another thought in my head, why the dollar will push higher. And also cable, worth having a look. I've got it in my head that fundamentally the pound should drop. The British economy is not in a good state, is it? There's a lot of things wrong in the UK. So I've got it in my head that the pound should fall on a fundamental level. Trend-wise, we are not going anywhere. You can see that on the 4 hour chart. This goes back to May. But more recently, we have been going down. We are in a negative trend on the 4 hour chart, and we are nearing resistance around 134.75, 134.80. We've got the 38.2% fib. We've got a trend line going back to the 18th of September. There's a bit of moving average resistance just above it as well. So we'd have to get above the 50% fib at 135.25 for me to feel more positive, or at least think that we're not going to collapse. But this is definitely the level to watch today in cable. If we hold it as we are at the moment, we should see further downside. I hope that's helpful, gives you some trade ideas. Good luck if you're trading on Wednesday. I'll talk to you tomorrow.